Hello and welcome to another episode of the of the markets at welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, markets analyst at FX Pesa. So today we'll be having a great session where we basically get to talk about the US presidential election. That's happening today on the 5th of November. And we'll be trying to understand how the elections progress might impact the markets and how to potentially trade and prepare for a high volatility environment. And this way, you're able to take advantage of the opportunities that may arise in the markets during this period. So, good morning, Owen. Can see Gerard in the house. Mary Wairimo, welcome. Thomas Mashuma, thank you for joining the session. So I appreciate you guys joining the session. So let's get things started. So today I'll be starting with a clear graphic of what's currently happening with the US elections. So of course, as we all know, the US election is basically a lengthy process. So it's not like one of these elections that we have in African countries, where once you have done your vote casting, then the following day, you're already counting the votes, and in a few days, you already know who the president is. So for the US, it takes quite a period. So as you can see, it basically starts with basically the nominations. So for a person to be running for president, they have to be born in the US, a minimum age of 35 years, and a US resident for at least 14 years. So of course, there are two major parties, the Democrats and the Republicans, but there are also other parties as well as independents allowed. So we have already gone through all those processes. And today is the D-Day for the general election. So this means that the last vote will be cast on or before midnight. So people in every state across the country vote for one president and vice president. So when people cast their vote, they are actually voting for a group of people known as electors. So when generally people cast their votes, then those votes are associated with the electors who represent them in what we call the electoral college. So in the electoral college system, each state gets a certain number of electors based on its representatives in Congress. So basically, I would say states that have more people will have more electors, and states with less populations will have less electors. So we can already see in examples here. There's a state with 55 electoral candidate representatives. There are some states have only 3. So this basically shows you that there is a different number of electors in different states. And once they are selected, now they also go and vote and decide who becomes the next president of the US. So each elector casts one vote following the general election, and the candidate who gets more than half, that is 270, gets to win the election. So during the election process, there is 2 major states that don't have this process. So instead of electing several electors for those 2 states, the person or the party that basically wins the general election, let's say in a state, let's say like Nebraska, everyone or a majority votes for Trump, then Trump gets all the electoral candidates. So in other states, it's a little bit different. So in this case, the process will take some time. So it will be in the month of December when the electoral candidates in the electoral college will be voting for who becomes the US president. And once they vote, there will be counting of those votes. And eventually, we'll get an inauguration of the new president on the 20th of January next year. So it's not a make or break process. It will take some time. And in this view, it means that there's a good likelihood that the markets may take some time to react to the outcome of the US election, because even after today or a few days from today, you'll still not have a clear picture of who has won the US election. So expect a lot of volatility in the markets as people try to speculate and decide who becomes the next US president. And of course, the policies that they have presented or fronted during the campaigns are the key deciding factors of where the investors might be allocating their funds. So for instance, we know that the Trump presidency might be promoting the use of fossil fuels. So it could be good for the energy sector, but then win by Kamala Harris would promote green policies. So we could be seeing the green energy sector largely benefiting from presidency of Kamala Harris. So there is quite a number of variations and different policies that investors are looking at, including tax cuts, taxes on social security benefits. We are looking at potential trade wars between US and China and so on. So there is quite a number of factors that investors are looking forward to. And today will not be a make or break. So there's still a lengthy process that we have to be patient and observe. But within this period, we expect slightly higher volatility in the markets. And that's good for trading, but you have to be careful because higher volatility means higher opportunities, but at the same time, higher risk whenever you're executing your trading positions. So other than that, we can look at the economic calendar. We have some big news that have happened this morning. So on one side, we had the Reserve Bank of Australia basically making a decision on interest rates. So there was no surprises. We expected the RBA to be holding rates steady at 4.35%, which is exactly what they did. So after that, we saw the Australian dollar strengthening. So looking at other commentary on the same. So Reserve Bank of Australia is expected to hold rates at 4.35% on Tuesday, according to all that economists in the latest Reuters poll. So the focus will be on any shift in its restrictive policy stance. So this is an old article. I believe we should be getting a new one. So we didn't have any surprises on the rate decision by the Reserve Bank of Australia. And now looking forward to the rest of the day, the only major news we're expecting is the final Services PMI, as well as the Institute of Supply Management Services PMI, or ISM Services PMI, which happens at 6 p.m. So the overall expectation for the services sector in the US is a slight slowdown from the previous reading of 55.3. So 55.3, we don't expect much of a change on the official one, but for ISM, we expect a drop from 54.9 down to 53.8. So a key thing to notice is that these levels are way above 50.0, which is the midpoint between contraction and expansion, so which basically implies that the services sector in the US is still in expansionary territory. So an increase in services PMI will be positive for the dollar. And of course, a drop in the services PMI is expected to be bad for the dollar. So as concerning the presidential election, as well as the congressional elections, we don't expect much. Of course, there will be more last-minute campaigns from Trump. The biggest news in the campaigns is that Joe Rogan, one of the top podcasters in the world, basically announced his support for Trump in the US elections. So that might be a big push for Trump and potentially could help him win the general elections. So besides that, on other economic news, China services PMI beats estimates, so indicating that China's service sector is improving better than expected. So in this case, it rose to 52.0, growing further into expansion territory, up from 50.3 in the prior month. So this topped the market forecast of 50.5 and marking the highest reading since July, after Beijing launched a series of support measures in late September. So other news, Australia holds cash rate as expected, European markets set for muted open, Indonesia Q3 GDP growth weakest in a year, dollar holds decline amid tight US presidential election race, Philippines inflation rate picks up in October to 2.3%, up from the previous reading of 1.9%. And UK retail sales growth slumps in October, in this case increasing by just 0.3%. So this was a much smaller growth compared to the previous reading of 1.7% that we saw in the month of September. So besides that, trying to see if there's any other highlight in the market. Of course, the SP 500 has not been doing really well in the last 5 days. So the 1 week performance shows that overall a majority of the companies have been on the losing side, with key highlights like LED being down 9.99%, AMD being down 12%, Palantir being down 7.92%, Microsoft 4.25%, 4.88% for Apple, Nvidia 3.18%, with select stocks being on the upside, such as Amazon, which is up 3.92% after reporting better than expected earnings. Tesla is down 7.49%, but we have Booking Holdings up 9.87%. So majority of stocks are basically in the negative. Utilities are almost all of them have been losing for the last 5 days. So overall, we are seeing some form of market panic, or basically investors taking precaution ahead of the US election, hoping to see some calm. And after the market stabilizes and we have a clear direction of who wins the elections, then I expect to see the market coming right back up, or basically making a strong recovery. So right now, there's quite a number of new developments. Of course, Palantir reported better than expected earnings last night. So despite being down over 7% in the week, today, as the market opens, we'll be expecting the stock to have rallied by 13.72% in after hours trading. So the closing price as per yesterday was $41.41, and today's opening price is expected to be $47.09, indicating the large spike after announcing better than expected earnings. So if you're a stock market trader, this might one stock that might be volatile today after open, following the better than expected earnings and the double-digit increase in the pre-market trading after the announcement of earnings. So outside of that, on the Forex market, we have seen quite a number of developments. One, after the Reserve Bank of Australia decided to hold rates steady, we saw an uptick against the dollar, the currency gaining by 0.43%, being the best performance among the top or the major currencies against the dollar. The New Zealand dollar was performing similarly, still up 0.43% on the day, whereas the pound, the euro, and the CAD have had some slight gains against the dollar. Swiss franc almost the same, and the Japanese yen slightly losing against the dollar. So, of course, the strongest currencies of the day seem to be the Australian dollar as well as the New Zealand dollar today. So, looking at year-to-date performances, Bitcoin is still up 62.5% against the US dollar, whereas on other crosses, we see the pound yen being a big performer this year, up 10.14% this year. We also have the USD yen up 8.06%, meaning that the yen has majorly been losing against the yen and the US dollar. Whereas the next big performance has been USD CAD, where the dollar has gained about 4.87% against the Canadian dollar, majorly because of weak oil prices, which have also weakened the Canadian dollar, in combination with 3 consecutive cuts by the Bank of Canada. So that being said, trying to see if there's anything else I missed. Yes, we have a summary of the performance of the SP 500 index in previous years, that is during election years. And this is quite a good summary. So it basically talks about what the stock market typically does after the US election according to history. So in this case, we have a summary analysis for a day after elections, week after elections, month later, and then year end, towards the end of the year. So immediately after the elections, the following day, if you look at the 2020 election, the market gained by 2.2%, 2016 election 1.1%, 2012 dropped by 2.37%, and so on. So when you compute all the way back to 1980, then the average performance in the first day after election was a drop of negative 0.3%, meaning that the SP 500 doesn't particularly do well in a day after election, with the median performance being 0.66%. So on the other hand, if you look at the week after, the average performance is a drop of 0.84% with a median of negative 0.31%. Then when you move to a bigger period, a month later, remember, a month later, now you have already known who has won the election and confidence resumes back in the markets. So for instance, in the last election, the stock market was up 8.83%. After the election, the other election 4.98%, and so on. So in this case, the overall performance now is positive with 0.40% gain on average, with a median of 2.38% gain since the 1980. So this is a 44-year-old data, which basically spans the last 10 and now 11 elections. So this will be the 11th election since 1980. So on the other hand, if you look at the year end, this means the performance of the SP 500 from the day of the election to the 31st of December of that year, then you'll notice quite a variation that the stock market tends to perform even better, with the last election being one of the best results, up 11.48%. The previous one, 4.64%. The other one, negative 0.15%, negative 10.19%, 7.2%, and so on. So on average, the SP 500 gains by 1.54% towards year end and gives a return of 3.72% towards the end of the year. So this means that a likely trend is that the stock market tends to pull back during the election days as investors are not sure who might win the election. And eventually, once they realize that this is the potential outcome and they have confidence that this person is winning the election, then they buy back and pump the prices higher, eventually ending the year on a high. So that's the overall expectation of the US election. So that being said, I don't think there is another update. I'm just trying to see all the highlights. Nothing much. So I believe now it's time we jump into some technical analysis and try to understand where the markets might be headed next. So I'm checking on the comment section. Remember, as always, if you have any questions, feel free to type them on the comment section and I'll be responding to them as we go. And a disclaimer that this session is not investment advice. It's not a recommendation to trade. So always do your own due diligence. So good morning, Felix. You can see Rono in the house, Peter Samuel in the house, Venesis, thank you for joining, Buba Fred, Dennis Mwangi, Simon, RCA Nation, Lucy, Jason, and Maureen. Wangari Patrick, thank you for joining. Aikobwa, Nonisa Jack, and Owen, thank you for joining. Leonard, thank you, and good morning. So I'm already seeing some good comments coming in. So as I mentioned, I'll be responding on the go. So your take on RBA holding rates and the future of the AUC going into 2025. So the RBA has been holding rates for almost a year now, and holding at 4.35% is a decent interest rate. So by them promising to hold rates at 4.35% until the economy responds, it basically means that other central banks are cutting and RBA is not cutting, which provides for a more stable environment, which tends to attract investors in their treasuries. So as a result, you continue seeing their currency strengthening. Also, the Australian dollar being a commodity currency that is associated with gold, as gold continues driving into new all-time highs, then the Australian dollar tends to benefit also. So we have two factors supporting the performance of the Australian dollar. So we could be seeing the Australian dollar remaining strong through to 2025. So it might make sense to be looking at pairs that might be weakening. An example is the yen, which has been pretty weak for earlier in the year before it gained, but now it's losing again. So I would be very much interested in the performance of the Australian dollar against the yen, where on one side we have one central bank holding rates at 4.35%, and the Bank of Japan stuck with a maximum of 0.25% interest rates, which provides for a clear carry trade between the two economies, making the Australian dollar continue to strengthen against the yen. So I hope that answers your question. Morning, Leonard. So another good question. This is from Dennis Mwangi. For a Trump win, what does the future hold for Tesla stock based on the relationship between Trump and the CEO? So of course, Trump has, Elon Musk has done his job. He has really tried and supported Trump throughout the campaigns. He has pushed himself out there. I've never seen him being that political, which basically implies that he could be getting some good rewards after Trump wins the presidency. So if Trump happens to win this election, then we could be seeing perhaps even more tax credits, carbon credits for Tesla, which would be largely beneficial to Tesla investors. But one of the key things to notice is the overall policy of Trump. He tends to be nationalist, pushing for dominance of American companies to the rest of the world. So he could be negotiating for better trade deals between the US and other economies, thereby creating bigger and better markets for American companies, and that includes Tesla. So we could be seeing Trump pushing for better deals, especially in the Eurozone, which has been a web of regulatory environment, clearing the way for American companies such as Tesla, which would be largely beneficial for Elon Musk. So that's the angle I visualize going forward. So good morning, Makomondi, and thank you for joining. I can see you, Gino Thiambo. Hello. Are there instruments considered to be safe, stable to trade during uncertainties? And how does one navigate the market during such times? So the thing is, whenever there's uncertainties in the market, people tend to go for safe haven assets. But then if you look at the safe haven assets we have been using for the better part of the year, this has mainly been the US dollar, gold, as well as Bitcoin, and they are all taking some steps back during this election. So it's not like war is happening. It's just a normal electoral process that is already priced in the markets. So the idea is that for about 2 weeks, we might be in this limbo where we don't know who will win the US presidency. So during that period, we could be seeing some asset prices going down, but then eventually they will pick up. So for me, I'll be looking at potentially buying these assets that are taking a step back, assets that have a long-term bullish trend. They might be taking a step, a pullback, which represents an opportunity to buy at a lower price. So that is one simple approach. So on the other hand, if there's any asset to be considering stable, that would probably be in Asia, where the markets are not that directly correlated to the dollar. So in this case, for instance, if there is a war, let's say in Kenya, it would negatively affect countries that are around us or our major trading partners. This would be directly impacting countries like Uganda, Tanzania, and so on. So if there's uncertainties in Kenya, they also affect currencies around us. But the ones that are quite distant geographically, they tend to benefit from that as investors rotate to safety. So in this case, it might make sense to be looking at the Australian dollar as well as the New Zealand dollar as potential currencies that might not be affected as much by the current uncertainties happening in the US. So we could be seeing a strong Australian dollar and New Zealand dollar happening in the next 2 weeks before things rotate and people start buying back into the US market. So that's it on the fundamental and news side. So I believe now we can jump right into some technical analysis and try to understand what are the plays for the day. So there's a good question here. We have an event happening on Friday in Meru. The question is, how much are you charging for the event and how do I register? So first, the event is free. FXPesa does not charge for any of its events. So it's always free to attend unless something changes in the future, which I don't expect. So how do I register? You secure your seat by going to our social pages. I believe the best one is Twitter. Just go to Twitter and look for FX Pesa handle. I'll try and show you this. So this is the event that's coming up in Meru. Get ready to elevate your trading skills with expert insights on mastering risk management and using effective strategies. So the location will be 3 Stars Hotel in Meru, and the event will be starting at 1, going all the way to 6 p.m. So register now. The event is free, and the link to register is here. So I don't know if I can copy the link. Yes, copied. And now I can paste this in the comment section. Hopefully it will work. So whose policies do you suppose is more inflationary? I don't think there's one outright candidate you can say that their policies are more inflationary. Both candidates are looking to expand spending, deficit spending, whereas Trump has proposed a Department of Government Efficiency that would cut the US government spending. Kamala has not proposed anything of that sort. So technically, we could say that Kamala Harris is looking to spend more money than Trump, which would cause more inflation in the US economy compared to Trump. So at the same time, Trump is pro fossil fuels. So if there is higher fossil fuel or oil production in the US, then energy prices could go down, which is anti-inflationary. So as I mentioned, this is the similar question. Oil, how will it be affected if Trump wins? So Trump is looking for an energy independent US. So he's looking to boost energy production, support energy production. So if that happens and there's excess energy, then energy prices remain low. So in this case, a Trump win might be negative for energy prices. So let's get on to the charts. I know this is the favorite part you guys have been waiting for. So I'll try to make it a little bit faster. So first things first, the interest rate decision by the RBA has led to a strengthening of the Australian dollar. And now we are already retesting yesterday's high, which has the potential to extend even higher. And a major trend line has already been broken, which means now we visualize the previous week's high. So the previous week's high, remember, last week's high has already been broken. So the previous week's high is all the way up. So this is the price action level I'm talking about. So let me remove some of these lines so the chart is clear. I tend to add all these lines on my charts over time. So previous week's high is all the way up. So now with that less lines on my chart, it might be clearer for you guys. So this is what we're experiencing in the last 12 hours. And the potential target now, as we have seen the Australian dollar strengthening, is that the market heads to 0.67222 on this current rally after breaking this upper trend line that has been holding for the last 4 weeks. So there's still a good chance we continue seeing some upwards trajectory on AUDUSD currency pair. So the dollar index happened to open the week with a big drop-off, continued pushing lower, but in the afternoon yesterday pushed back to retest this support area now turned into a resistance. And now, as we enter the London session, you can see what's happening. Dollar index is continuing to weaken. So as per the analysis yesterday, we expected the market to retest this area and move downwards, but then we got a secondary retest. So now we have a second retest, and the idea is still the same. The dollar index continues weakening, and potentially you see 103.104. So with that in mind, then we expect other currencies to be recovering. Of course, we expected the Euro USD yesterday to pull back to the Asian low, which did not happen immediately. So it attempted to push higher, but then eventually dropped to around the same area. And now today we are seeing a bounce. So overall, of course, now this has been turned into this, and this has been turned into this. So now we're expecting the market to be pushing all the way up to at least retest yesterday's high. So this is the overall idea on Euro USD. Similar to Pound USD. So yesterday we expected the market to pull back and retest the Asian low, which it did. went back up and retested twice. And now we are seeing the market bouncing again and moving towards the higher side, which means that today, a key level area to observe is whether the market breaks yesterday's high, which was also last day's high. So this might be a key level area to observe as a retest. But for now, very short-term trading is that the market hits here, and potentially, if it breaks, then we move to this other side around 1.3035. So pound yen, as I mentioned, has been one of the best performing assets in the currencies market. So having dropped yesterday to our predetermined area, we saw a nice and strong bounce, and now the market is moving back higher. So of course, the target area is the previous high, so around 198.416. So USDN, notice how we are seeing this cycle of events playing out. So yesterday, we projected that the market would come back to the Asian high, retest the Asian high. So this was almost with pinpoint accuracy. So notice the open of the market, which marked the Asian high. And now this morning, the market retests the same area. And now we are seeing sellers coming in, which means that now we are likely to go back down to 151.552. So Nikkei 225 index continues struggling to make this recovery, but the idea is still the same. So what is changing is the angle of this line, meaning that it's taking longer to push higher, but the overall idea is still the same. The market remains within this triangle and pushes towards this area here. So gold, we expected a make or break kind of a performance yesterday. So that did not play out. There was a lot of mixed reactions. So the markets haven't moved much since yesterday. So from what we can see is a development of some form of consolidation. So from Friday, Monday, and Tuesday, this is what is emerging as the overall price action in gold prices. So with this kind of expectation, then a potential breakout might be quite beneficial for traders. So the breakout could either happen to the upper or the lower side. But then given the weak dollar that we are seeing in the markets, then a good chance that we see a breakout here would mean that we eventually see the market making a run for 2760. So that hasn't played out yet. So we continue waiting. Then we see if we happen to see this breakout playing out. So Brent oil continues with this recovery, and we are almost there. So notice this area here, which was acting as a previous resistance. Now we could be seeing the market retesting this area here. So markets took quite a number of days, I would say 4, and today being the 5th day, just to recover the price action on Monday last week. So once we get to this area here, the overall expectation is that the market gets to this area, see some form of profit taking, and price pushes back downwards. So we could be seeing a drop towards the lower side, eventually closing the weekend gap, and perhaps the market drops to $72.744 per barrel. US equities, we expected this resistance to lead to a drop towards this area here. So notice how the market continued to drop, but once it got close to the target, immediately bounced, and now we are seeing the market moving in the opposite direction. So in this case, the consolidation continues. In this case, the market now looking to retest the upper side around 20,117. So expect some more ranging activity until there is something fueling the markets. So the USD continues to struggle to bounce from this area here. So it's a key level support area here. But then if you look at the price action, once we got here, there was a nice bounce. But then the market got back to the same area, grabbed some liquidity here from the previous low. And now we could be seeing a potential rally extending towards the upper side. And of course, we have a trend line shaping up along this area here. So potentially continuation of this bounce towards around this area here. So we could also be seeing an extension to 42,076, which was the previous support area here. So Russell 2000 also picking up, attempting to move higher, but it's quite clear for everyone this market is more of a consolidation than a bullish or bearish momentum. So overall, we haven't seen a major push higher or lower. So if I use these as the extremes, the high and the low, then we have seen quite a number of chart patterns. But then the one that is almost obvious is the triangle that the market is trading in. So if you look at this, it's more of a market that is facing higher lows. But then if you look at the highs, they're also getting lower. So the market is just oscillating between these two. But if we were to use this previous high here, then we would argue that the market already formed a breakout. And now what we are seeing here is a retest of this support area. So if the market was in this triangle and eventually made the breakout here, then a pullback, and now we are not seeing a very strong bounce here. So US 500, it's a similar thing. So we had projected that there would be a resistance here for the rest of the day. So eventually the market remained within those limits. So if you look at the lower side, so we can feel free to adjust our trend line to this. So we don't have much of an activity here. So it's more of a consolidation for SP 500 traders. So nothing much is happening here. So it seems like the markets, or in a large number of market participants, are basically reducing their market activity as we head into the elections. And then potentially a big move will be coming. That hasn't happened yet. So potentially we could be seeing the market continuing to weaken or move sideways. Then after the election, we see a strong bounce. So for now, it's more of a sideways momentum. So Bitcoin also in a similar kind of path. So remember, we mentioned that we had a breakout, retest, and continuation, and today it's proving right. So from the 4-hour chart, you can see how we have strongly bounced from that support area here. So for the last 8 hours, a very strong bounce, which implies a likely rally from this point onwards as the market looks to retest the high that we saw just last week. So for other currencies, we have seen the dollar trading against the Swiss franc. We noticed there was a breakout on the lower side here. So yesterday we projected that there would be a further drop to this area, and then there was a bounce, and now the market is heading down again. So which implies that now we head into the next support area. So potentially we could be seeing the market going for these levels here. And this is around 0.86076, which is quite a clear path. So potentially the dollar losing to the Swiss franc down to 0.86076. So New Zealand USD making a very strong bounce. So after yesterday's projection that the market would retest this area here, we are seeing the price bouncing quite strongly. So from the 4-hour chart, this is what we are seeing. And now a potential strong rally to the next resistance support area. So in this case, we are seeing this area as an area that was holding on quite well and now becoming a likely target for today's market price action. So in this case, a potential extension of the rally this week to 0.60486 after the market failed to form lower lows last week. So we could be seeing an extension of this rally. And of course, for USD CAD, from the daily time frame, we have had 2 consecutive days that the market has been selling or moving further back downwards after the strong rally that lasted a whole month. So last month was quite a bumper month for USD CAD traders. But then since we got to that high, this is the chart we are looking at. So we have had 2 consecutive days. Today is the second, where the dollar is losing to the Canadian dollar after hitting a major resistance. So in this case, pullback is within expectations. Of course, the next available point is 1.38489. So this was the previous high that we saw in the month of April on the 16th. So now the potential is that the market continues dropping and eventually gets to this area. So from the 4-hour chart, I'll try and adjust this. We expect a drop to this area here. So on the 1-hour chart, this is how it looks like. Of course, we have a major support area here. It is currently being retested. And if the market breaks, then we will be looking at a potential move here. So if we happen to see a break below here, then the drop to 1.38489 becomes quite an expectation. So easy to observe, just wait for that push to happen. So that's it. That's it for the day. Thank you very much, everyone. So if you're watching this on X, remember to like and share the video. If you're watching this on YouTube, remember to like and subscribe to the channel. If you're just starting your trading journey, make sure to register for a trading account using the links in the description below. If you're on X, visit the FX Pesa page to find the link for account registration. So at the same time, if you're just learning how to trade, make sure that you go through the Novice to Pro series. It's available on the FX Pesa YouTube. And if you want more information on the progress and the impact of the US elections on the market, then check out the Bullish Banter podcast, which is available on FX Pesa YouTube as well as other podcast platforms. So thank you very much, everyone, and I hope to see you on the next session. Thank you.